power. Oh, yeah. And I'm your host, Pastor Kevin McGee of the Victory Temple Church of God in Christ. You're listening to us on Intellectual Radio and also listen to us on iHeartRadio. Connect to keep you connected and network to those in the Christian community who are established. And if you wish to become a Connections advertiser, have you set weight loss goal for 22? Do you take medication for high or perhaps you just want to maintain a healthy body? 708-302-5655. The Bedrock Movement affirms safety, comfort, dignity, awareness, and empowerment for Chicagoland street homeless. For any internship needed for school, community services mandated from the court, or you just want to volunteer assisting the street homeless, please contact John Netherly at 773-567-5110. And today we're going to talk about taxes. This is tax season.
Yes.
They coming for you. And they get their money first. They get their money. They get their money off the top, and if they don't get it first, they're gonna get it last. But trust me, they're gonna get their money.
They definitely gonna get
Has anyone ever been audited? Has anyone ever been? They're gonna get their money. Have you had your wages garnished because you did not do? All right, don't claim somebody who's dead. Don't claim somebody else's kid. You can't do that. You can't do that. All right. So we're gonna talk about this because we need to be educated. We need to be informed on how to properly manage our taxes. So that we won't get in trouble later on down the line. Full woman here. She is the budgeting queen. She is no stranger to Connections, Shunda T. Smith, and she is going to talk to us about the do's and don'ts of the IRS and what you shouldn't do, what you should do, as well as financial literacy as a whole. And we're just so grateful to have you back with us.
Thank you for having me back. I'm really excited. When you reached out to me, I was like, yes, this is the right time.
Yes.
Because tax season, IRS start accepting returns on Monday.
I know.
In 2 days.
I already filed.
So you're just waiting to hit the button.
I'm just waiting to hit.
See, that's exactly how it should be. You're just waiting to hit the button. But yeah, so my baby, I am the budgeting queen. Since I was last here, which was what? Last year?
Last year.
Yeah, last year, I think we did a couple shows and we talked about taxes. But this year, I'm going to bring some do's and don'ts and a little bit more financial literacy too.
Our young people need to know it. And
Absolutely.
We said to some past shows that our young people, especially going into college, they need to know that, especially if they're going to be living on a campus away from home and away from the advice of their parents on how to manage their money, they need to be able to go into college armed with information about financial literacy so that they won't be calling home every weekend. Mom, I'm out of money. Dad, I'm out of money.
Also, so they won't get caught up with those credit cards that they hit you with the first week of college.
Yeah, because I got hit with, I remember I applied and got 5 credit cards my first year of college because I didn't know any better.
You think, free money?
Hey, that's what I said, free money.
Free money.
When I first signed up, I forgot that you got to pay them back.
Like you always got to pay them back. That's what I think all of us forget.
And then I thought you just pay back what you used. I forgot about, I didn't know about the interest.
Adds on.
I said, wait a minute. Yeah. I said, I only charged some of those $15, but now they're talking about, they sent me a bill for $20. What's going on here? I didn't realize that.
I think that's where all of us got our first financial lessons. If you didn't learn it in the house, you went to college, you got that first credit card, you thought you was on. You like, yeah, I'm finna go buy me some shoes, and then next thing you know, you owe $1 million for those shoes that you bought. Freshman year of college.
Exactly. And see, many of us, especially growing up, our parents just said, give me a couple of dollars towards this and that and that. We thought that was paying bills until we had our own bills to pay. We had our own credit card bills, and we realized, wait a minute, this is more than just giving mama $25.
Absolutely.
Every week or once a month.
Absolutely.
I'm into some serious business here. And so this is why not just our young people, but our seasoned people as well in regards to financial literacy, but especially during this time with the IRS, because for some, it's a happy time because they're going to get a lot of money back. And some, it's a sad time because they're going to have to pay. I've been on both ends. I've been on the end where I had to pay. I've been on the end where I got money back.
Me too.
And thankfully, I've gotten more money back than I ever had to pay.
Me too.
It's garnished because I didn't file for a couple of years, and
Oh
I
yeah.
had to go to a CPA, and he got me together, and I've never been behind since.
I'm glad you brought that up because people ask all the time, do they have to file taxes? Oh my God. You know how many people that I've talked to in the last several months was like, so I haven't filed for the last 5 years. And I'm like, but you've been knowing me for 20. How is it that you I
That's
just tell people that everybody's not required to file taxes if you don't make a certain amount of money. But everybody, if you're making money, should be filing taxes, at least looking to see if you can have to file your taxes.
exactly. And I tell young people, enjoy while it lasts. In your comments, if you have any questions for Shunda, you can put it in. God bless Dimitri Brand Tripper who's watching. She's saying greetings. Sharing because this information is because of this information we can feel, or you can feel free to call us at 708-223-8953. That's 708-223-8953, and we're going to get right into it. And we've already said the first thing, because a lot of people want to say, do I need
Do
to
I
file
need to file?
taxes?
Yeah.
And let you have it.
Well, like I mentioned, yeah, everybody who makes money gets a W-2 or even a 1099 for that matter should actually be filing taxes if they make over a certain threshold of money. And I know people always ask me, well, and this is for those people who don't have W-2 jobs, those who do 1099, they're contractors and things like that. You know, people thinking, oh, I don't have to file taxes because no taxes was taken out of my money. But if you want to like contribute to the society and you know how people over the years, then it would be in your best interest to file your taxes. But it also depends on certain things like your age, how much money you made, and your filing status. I pulled out this little chart. It's called the earnings threshold chart for 2019 taxes. So if your filing status is single and you're younger than 65, you have up to you can make about $10,400 before you have to file tax. So up till that limit, you won't have to file taxes. So like for those of us who got kids who work over the summer and stuff like that, and people ask me, do my child got to file taxes? It really depends on how much money that they've made on if they're going to have to file the taxes or not. And then, but if you're married and you're filing jointly for both of y'all, if you're under 65, you can make up to $20,800, but that's together. So that's not a whole lot of money.
Okay.
It's not a whole lot. So it just really depends on, but in essence, yeah, you have to file taxes if you make over a certain amount of money based off of how much you make, your age, and like I say, your filing status.
Okay. And so that's a good
Yeah.
threshold. They're still thinking, I got to pay taxes. Oh, God, I'm not going to have any money and this and that. Because my kids were like that,
I was like that when I was 16. So.
And my youngest son, Jared, he worked, but he never reached that threshold. So he's never had to file.
He's never had to file.
Never had to file. And this past year, he has not worked because he's focusing more on, this last year and a half of school that he was at and making sure he can keep his scholarship. And so he did not work. And so, consequently, now he's ready to graduate in the month of May. Praise the world. But at least, he has always worked. All of my kids have always worked. And so they know that at some point, my oldest son, yes, he has filed and he has received returns back. Not much, but he has filed and received returns back. And so, and then I had to educate him on the penalties because now, if you don't have health insurance, that can be a penalty. So my son had to get health insurance, and so that he won't be having to pay Uncle Sam.
That's true. It's been a lot of changes that didn't happen over the years because, I've been doing taxes forever. Like I started out when I was 16 doing taxes. I made it a legal business back in 2009. So I've seen the tax game change from what I had to write out with. And so with the new tax laws and everything too that have been implemented over the last several years, it makes it more difficult, especially for people like in our age group and older than us, because we only have as many things going on and things that you can write off. Now our kids are having to, like you say, decide like, okay, so this is how much I want to make, or what do I need to focus on for my life situations, and we need to be ready to educate them. And that's all right. I'm here. I'm gonna have all this information. I'm getting my website updated because that there are certain things that most kids know about. Like you say, they know about working. They know that taxes come out of your check, but they don't know about having to pay taxes at the end of the year. They don't know about having to file your return. They don't know how to fill. I had to teach her how to fill out a W-4 form. So it's a lot of things that go along with doing the tax season, especially when you got working minors.
And something you said, Uber drivers.
Yes.
Uber drivers, Lyft drivers, ride sharing drivers. You have
Yeah.
to do that at tax time because and you'll get your your
1099 form,
but
yeah.
all the money you should be filing or what have you. But a lot of people think because I'm 1099, I'm an Uber driver, I don't have to pay. They don't know how much money. The IRS knows how much money you make before you make it.
This is true.
Your employer
is going to report that.
They report it, and so but see, also I've learned over the years that just because you are entitled to when you're filling out
Your W-4.
your W-4
with all your
exemptions. Just because you're entitled to all those exemptions,
don't mean you should take them.
You can take them if you want to. I found out the hard way. I 1 year I was entitled to about 5 exemptions. I took every last one of them and didn't get no money back because there wasn't enough taxes being taken out of my check.
I have a story about this. And this is actually involving my brother. And my brother passed away a few years ago, but this was when he was a young man and he had just got his good job working at the post office and all this other stuff. And he was found out at the end of the year, no taxes had been taken out of none of his stuff. He didn't even know. He hadn't even paid attention that they hadn't taken any taxes out because he was taking, like you say, all of the exemptions and was wondering like, why I got to pay at the end of the year? But if you're not paying attention to your check, you're not taking those exemptions. That's a whole nother subject because I get asked, well, I got exemptions and I got dependents. Those are not the same thing, people. But we'll talk about that at another time frame.
So I don't take all my exemptions. I usually, if I have 5 or 6, I'm gonna take half.
Yeah.
I do half. I always leave. I take some and I leave the rest of them. I say, here, y'all can have these other ones, because I want to make sure I get some money back.
This is what I do. What I tell you, fill it out completely. You see exactly how many exemptions you qualify for. And like you said, you don't have to take one, or I'll just claim me or my daughter or whatever. I wouldn't even take any of my W-4 exemptions because that's when I was getting monies back. But as I got older and she was older and things changed in my life, I started. I want y'all to hear me. If you don't hear anything else I say today, like you said at the beginning of this, the IRS is going to get their money. Either you're going to pay now or you're going to pay later, but you are going to pay. So you just have to maneuver it to figure out how you want to receive your money. Because if you are at the end of the year, and let me clear this up. At the end of the year, when you get a tax return back, you get a refund back. That was not money that was owed, that was just given to you just because. That's really your money that you loan to the government and they now giving it back to you. That's all that is.
But the
goal is to break even.
And you're still not getting all the money that they took from you.
Well, that's true. You're still not going to get everything. They got to keep some sort of government runs.
But see, I want all my money in my check. I need all my money. I got these bills to pay. Mm-hmm. But then you have to look at it on the flip side. When April 16th roll around, you're not going to have anything while everybody else has. Oh, I got my refund check. I'm going to buy my car. I'm going to put my down payment on my house. What do you have? Nothing. Because you took all your money up front.
You took all your money up front.
So.
And you got to make that choice for yourself. And if you want to I tell people, if you want to get your money, you got to decide if you want to get your money now or if you want to get your money later. Or like you say, or if you want to pay taxes now or if you what's going to work best for you. I know for me in the last few years, I was getting all my money then, right when my check was coming. And so I ended up having to owe a little bit more at the end of the year, claiming exemptions earlier on in my life than I have now. It was more beneficial for me to get the money now on my checks than it was to wait until the end of the year. And, I paid my taxes up and I'm good to go.
And then I think also it depends on the type of job you have and the amount of money you're making, because if you're not making a whole lot, it might be more advantageous for you to get all your money so you can stay above water. Mm-hmm. So you just really have to look at your situation
and see what works.
Move on to what you have.
Yes, the Life on a Budget program.
Right. But people ask that.
That's true.
People ask
That's
that.
true.
Can I just use what I did last year?
Did you make what you made? Third parties report stuff to the IRS. So your banks, your job, if you have like stocks and stuff that you're invested in, all of these different third party entities, when they file their taxes, because they file taxes also, they have to report their like whatever they paid out or whatever taxes they paid for employees for your company. So if your stuff don't match,
that left me $2 million.
Yep.
Okay. And I put it in my bank account. You mean the bank is going to tell the IRS that I got $2 million in my account?
I mean, do they want to get locked up for money laundering? I mean, stealing. I mean, yeah, they have to report. They have to report their certain stuff. They don't basically say, "Oh yeah, Kevin got $2 million over here in his savings account. Y'all go get him." No, they don't do that type of stuff. But they report their numbers from their tax return, basically. And if you are not reporting your $2 million, and on their tax return it says that there was $2 million that was linked to this, and you didn't report it, they gonna come find you.
See, this is why grandmama and big mama and them
they put it in a jar.
They put it in a jar or under their mattress. Under their mattress, because they didn't want the tax man to get all that money.
They don't want the tax man to get the money. Yeah. But yeah, you can do that. And I just wanted to tell you guys in case, because I know I had a couple people that they were getting letters and stuff over the last few years, because I know tax laws change. But if you're getting a letter, like if you didn't match up your stuff, the letter that they'll send out to you is called the IRS Notice CP 2000. That's literally the name of it. That's all it is. But it's just the form to tell you, hey, your stuff, your figures that you reported don't match what we have in the system that was reported for you. And they give you all of the details. They explain to you what the issues are. They tell you how to fix the issues. But and then you go from there. If you don't fix the issues, if you don't respond, they're going to send you out another notice that's called the IRS Notice CP 3219A. That's the statutory notice of deficiency notice from the IRS. Because then after that, then they get all up in your business and they audit you. They can audit you for 10 years back. And if you don't have all of your documents in order, then guess who gonna owe even more money if from not reporting something as simple as whatever you had, like your inheritance that you received from Uncle Junebug.
Or the money you got from the boat.
Or the money you got for the boat. People don't think they got to report gambling money. Like if you make over a certain amount. So,
But now,
my mom used to play the lottery, so she used to win all the time.
An inheritance, isn't it considered a gift?
It can be, depending on how you write it off. So it just depends on how to add it into your tax return, because inheritance can be listed as a gift, but if 9 times out of 10, $2 million is not necessarily a gift.
Well, my Uncle Junebug died and he left me some money. That's a gift. I didn't work for it. I didn't earn it. He just gave it to me.
Now, if this, like, part of it could probably be written off and you won't have to pay taxes on it, and then some of it you may have to pay. It just really depends. I don't know the threshold amount off the top of my head, but yeah, a gift tax. I mean, gifts you have to put them on your tax return, especially if they, $2 million that you inherited.
All right. Let's talk about this Life on a Budget program.
Yes.
Because that's a bad word among a lot of people.
Budget is your financial analysis, is what it is. Because and people think budget, it sounds restricted. It sounds no fun. It sounds boring. But when you say, okay, so we're going to talk about your financial analysis, people are like, oh, okay, that sounds a little bit more understanding, and people want to talk about it. But that's all a budget is. It's accounting for how much money you make, or how much money you're bringing in, and how much money is going out. And you need to do this so that you can plan for things. So this program that I have here, the Life on a Budget program, I did this class last month. And we talked about like the steps to budgeting. We talked about finding out how wealthy people make their money. So, and how they keep their money. So the financial banking process that I talked about teaches you a process that you can use to kind of build generational wealth and live your life on your budget. And when I tell people living your life on a budget is not hard, it actually becomes addicting, because when you are accounting for everything and knowing what things are, because you don't have to worry about if you got money for this or if you got money for that, because you know exactly how much money you got for these things. So in this program, I teach you those 4 steps. Let me just tell you what they are real quick. The 4 steps are, You're going to first step is give every dollar a job. The second one is you're going to embrace your true expenses, and then you're going to roll with the punches and then age your money. Now, these sound very simple. They sound like people's like, that don't sound like budgeting at all. That's because people think budgeting is just numbers. It's not. You got to learn the concept, because if you can't learn the concept, you can't apply 1+1=2 is what I teach in this. And once you're done with the process, I did record a video just for the same thing. I recorded a video talking about what these are. It's only like a quick 12-minute video that I'm going to be posting up on my website, which is www.budgetingqueen.com. And your information, you can always reach out to me if people want to get more information about it, because it's a lot of good information in this course that it's too much to talk about in the 1 hour segment that we have here. But if you want to reach out to me on my website, you can check me out on Facebook, STS Personal Financial Service, or you can check me out on Instagram at the _2_the_budgeting_queen.
Okay. Now, one of the points that you mentioned is
to the last penny.
So okay. So every single dollar that you get.
Every single dollar. The reason, let me explain that. Let me just break down this first step. When I say give every single dollar a job. So, when you get paid, let's say you get your $10,000 check, right? Because we're going for $10,000 checks. And when you put your check into your bank account, you need to know exactly what that money is going to be doing. Because idle money is a problem. Okay. Because people will spend it. Because you're trying to find something to spend it on anyway. And that's the reason why people don't have it, because I got this money, thinking about, okay, so I want to take a vacation for my birthday at the end of the year. People don't think about, okay, let me put some money to the side for that. Let me start saving up for those types of things. Okay, I have these expenses that's coming up around Christmas time. That's what I mean. You have to give your money something to do, or you're going to find something to do with it. And then before you know, you done spent the money and you don't have anything to shop for that. It'll be a lot easier to budget, because when you go and say, I want to buy these shoes, you can go and look into your clothes fund and say, oh, I got $5,000 in the clothes fund. Okay, I can afford to buy the shoes. It takes away your stress. It takes away your anxiety to set up your budget. Now, when you just haphazardly throw money in there and then you swiping your card and swiping your card and swiping your card, and you're not paying attention to what's going out, and then now you in the negative and you owe all these absorbent bank fees and charges and things like that. That causes undue stress and more money that you don't have that you owe. So assigning your money something to do, it works out in your best interest, because then it falls into the next step. Like say, then you're embracing your true expenses. And when I say embracing your true expenses, I'll go over that a little bit. It's like people, for lack of better words, they lie to themselves about their finances. And I was like, you can't lie to the accountant, because numbers don't lie. They don't. People do. But most people lie to themselves because they don't take into account that they like to drink coffee from Starbucks every single day for $5.
Yes, Lord.
Meanwhile, I'm drinking this $2, coffee from McDonald's, because Starbucks is my vice. That's why I always use it. But to save some money, I've saved $3 today.
And get that $2 coffee for $1. Any size premium roast.
Look,
all right.
You better tell them. Look, you got to find all of the deals, and that's what budgeting does. It'll help you to start finding deals on ways to cut down on money. To cut down on the average person don't want to have to do that because they think it's too taxing to try to say, okay, well, but if I want Starbucks, I should be able to buy Starbucks. You're right. You should be able to buy Starbucks if you want it. But if you can't afford Starbucks and you buy it anyway, and now you homeless for a $5 cup of coffee, that seems extreme, but it starts right there with that $5 cup of coffee. And it, just like interest, it builds, because it's not about the dollar amount. It's about the mindset that you have about that coffee. If you're not willing to change your mindset, you're going to always be in a state of being behind in your bills and always chasing.
For the past 4 weeks, I've been drinking Starbucks once a day, or at least twice a day. But let me tell you, I love Starbucks. Okay.
It's good.
I love it. And I love it so much that I even have I do my Starbucks at home. I get the coffee and just put it in my coffee maker, really good, and I would do it. But here's a smart thing, okay? Because I don't out of my own pocket.
Okay.
I have students that give me gift cards another.
Well, that's very
So I
smart
had
right
over
there.
$50 worth of Starbucks, and
Yeah.
I used and got reward points. So the other day,
You
I
get free
think
coffee.
a couple of chocolate chip cookies. See,
See, yeah.
so you have to know how to utilize apps,
Mm-hmm.
utilize the gift cards, because
Coupons, Groupon. Oh my
let me tell you,
gosh.
my wife would tell you there was a time I would not use coupons.
No, you're not broke. You're thrifty. You understand the
I just
value
didn't,
of money.
that wasn't my thing. I just didn't want to feel. I didn't want to be
You just didn't
bothered
want
with
to be
them. I
bothered.
don't want to keep up with them.
Okay.
Now I'll use them if they're on my phone or something like that. I'll
But
use
having to
them.
go seek them out.
Yeah, I'll use them in a minute. But that she has this little wallet or this little holder, and she'll go through. Oh, I think I got a coupon for this. I'm like, what? And then
I got an envelope full of coupons.
for this.
Right. But when you know better, you do better. You be like, okay, well, like you said, you changed your mindset. That's a perfect example. Initially, you was like, man, ain't nobody got time for coupons. And then you was like, you know what? I could save, like you say, could save a couple dollars if I use this coupon to save money. It makes you look for ways to do things a little different. And that's just the first step, because then what I also talk about after we do the Life on a Budget program, this one is called Life on a Budget, How to Create Your American Dream, because I've been telling people that everybody's American dream is not the same. Like, everybody don't want to buy a house and have 2 kids, 2.5 kids, and get a dog and a cat and all this other stuff or whatever have you. Some people want to travel the world, but you got to still plan for those things. You still got to do this budget so you can know where everything is at. You still got to file your taxes. You still got to pay your debt off. And those are other things that I talk about in my Life on a Budget program that are coming up. That those videos will be coming up on the website too.
Now, in your budgeting, since we are talking about the do's and don'ts of taxes.
Yep.
In your budgeting, I know taxes and making sure that you take care of taxes has been a part of that budgeting
Absolutely.
plan. What I wanted to ask is this: you have a husband and wife. Tax time, they're going to do their taxes. How important is it for them, or how can I put this? If they're married, should they always file jointly, or should they,
Oh, I'm so
file
glad you
separately, or
asked
how do they do
that.
that?
Oh, that is such a good question, because I've been told by clients, I'm the tax person. Oh, I have to file with my husband. I have to file with my wife. No, not necessarily. You can go, if you go onto the IRS website and look up filing statuses, right? It'll tell you the different filing statuses. There are 5 of them. We got single, we got the head of household, we got married filing jointly, we got married filing separately, and then we got a qualifying widow with a dependent, right? So when you're married, what the IRS website says, you can decide if you want to file separately, want to file jointly. It just all depends on which one makes you pay less taxes. These are the words on the IRS website. They said, so pick and choose. So what they suggest, do both ways. If you're married, do both ways to see how, and then do it separately. If it works out better to do it separately, then guess who's going to be filing separate? Because it makes more jointly. So it's really up to you. You don't have to file together. I had one client years ago when I first started doing taxes. She's been taught married couples need to file together. But when it comes to her, she had a house. The house was in her name. Her husband had been married for 40 years, but she said he never files his taxes and she's not getting involved in his malarkey. So she was going to file her taxes by herself so that she can pay her taxes on her income. Because if you file together, then it's y'all taxes and y'all income and y'all things. So that is a difference. But when you file separately, she's not liable for his taxes. So if he never filed, so what? He grab her house because he didn't pay his taxes or he didn't file his return. And that's the big misconception that people think.
All right, so people, if you got a spouse that's not a good money manager, that
you manage their stuff for them because they're your spouse. It's totally up to you. It's like, but the option is there. You don't have to file with them. Like I said, if they never want to do it, all right, don't let them do it. But you make sure you keep yours together. Don't lose your house because they don't want to file taxes.
All right, okay.
Now, if they don't want who the name is, the house is in their name, then you might want to come see me and I'll come file their taxes and we'll get you all together.
And if you both are filing taxes, hey,
Exactly. Or if one owes tax and one getting tax back, and you together, you can use your return to pay off their return. Like, it's totally up to you on how you guys want to do it. But yeah, that's a big misconception, that you have to file together when you're married.
I remember going to H&R Block. I remember going to all the different places to file taxes, sitting up there with all your papers and everything. You sit with the person, they're asking you a question, they're looking through, and they're punching in the computer, and you're just sitting there, and like a kid, the doctor's office,
Don't know
wondering,
what they gonna ask.
what kind of questions, and are you sure all of these are your kids? Are you trying to file somebody's kids that's not your kid? Wait a minute, first of all, let me ask that. How often do you find people using other people's kids?
Well, I'm gonna tell you this. I'm not going to jail for nobody. So if you come to me with some stuff and be like, oh, well, I'm trying to finesse the system, or I'm trying to do some things, if you tell me that that's what you're on, I'm not going to take your return, because they take the accountant to jail first. You're dealing with finances. You're literally dealing with somebody's entire life. So you're going to know everything about them, because like I told you, numbers don't lie. People do. And I'm not going to jail for nobody. So, but I have had people come to me and be like, so, my baby mama, or, those type of situations, or my baby daddy, or, my cousin got 17 kids, and people do that. They come and say, because when you are filing your taxes, basically you don't get any more credits or deductions or anything like that after claim. Whatever the threshold is for 3 kids, you can have 7 kids. You're not getting more than whatever that threshold is for them 3 kids. So that's why people sell their kids off, paying for 3 kids. Ain't nobody tell y'all to have those kids. So that's kind of how that goes, and that's why people are selling their kids off. So
that sounds like a horrible way of saying you're selling your kids off.
I know it sounds crazy, but that's what it is.
But we've been hearing about this ever since I was a kid. People, Junebug down in Mississippi, I'm gonna claim him, or dead relatives.
Yep.
Now, how do they claim a dead relative?
That claiming a dead relative, you usually have like a social security number or something like that, and those people are very tricky, because they keep the lie alive that this person is alive by claiming certain things. Those are people that are, for lack of better words, scam artists for certain stuff. But they do that. Like, it depends on too, like, if you are, because there are restrictions. Like, if you have a dead relative, you can claim them. I think I'm still try to claim them for years and years, because it just really depends. Like, I lost a child back in 2005. She was 7 weeks old. So, but because she was born in that year, I was still able to claim her for that full year. But because she's a minor, but when you lose a spouse, like my sister-in-law, my brother passed away. It'll be 4 years this year at the end of the year. My sister-in-law would have been able to claim him as like whatever incomes that he might have been getting or whatever stuff. Like, she will be able to claim him for up to 2 years after his passing for those taxes. Really? So the year he passed, and then the very next year,
because he could have had some income still being paid out,
because he made insurance policies, whatever retirement stuff that he may have had, social security, things like that, and is being paid out. She would be able to claim him as still on her taxes or something like that. But you only get 2 years. But people who are going further than that, they are dancing with the devil, because the IRS will get you. Like you said earlier, I know you was like, they seem to wait until you get so indebted to them and you owe them. That's how you stay in debt. And that's how you stay in the rat race of always having to chase money to pay bills. That's why I tell people, pay your bills. Please pay your bills. Trust me when I say I am not one of those people who is like, oh yeah, my bills have always been great. No, I'm not going to sit here and tell you that I've always paid my bills on time, or I've always done everything that I was supposed to do. This is how I know, because I learned those lessons from not doing the stuff that I was supposed to be doing.
Okay. So now, how reliable, like I said, what's it?
Jackson Hewitt. Yeah.
But now everybody can do it at home, TurboTax or whatever. Yep. How reliable is the online filing, and then in terms of TurboTax and all the others, what is the best software? Is there a better software?
Well, as you know, I do file taxes, and I use, for me as a tax preparer, the software that I use is Drake software. So I use that for all of my clients. But I didn't start using Drake software until 2012. Now, mind you, I've I've been doing taxes since 2009. Now, before I got with Drake, I was using TurboTax and I had used Tax Act before because there are plenty of tax services out here that you can find online. You can even go on the IRS website and file your taxes.
Right.
And H&R Blocks and Jackson Hewitt, they all advertising, oh, you can do it for free. So they're on Tax Act or whatever. And for those, it just really depends because I had to pay. I didn't have it where I could be free. Or is it to be free too? But it just really depends on what your comfort level is for the online stuff, or if how much you're willing to pay. TurboTax is a little bit more expensive than doing Tax Act, but TurboTax, they have a lot of other things in there that you can do. Like they have tax advice, they have things where you can check. They'll double check, they'll audit your thing for you before you send it, so to let you know what's your chances of being audited by the IRS and things like that. So the value of it really depends on what you're looking for. And like I say, Tax Act don't do a whole lot of stuff like that. It's very simple, quick, fast. Now, in my recommendation, if you're going to be filing stuff for yourself, I would say find something that's free, easy, and cheap. And most people that are doing though, like it's either free and it's easy, or it's, if you're going to pay for it, it's a cheaper cost.
Okay.
But typically, if you have like an easy tax, you don't have any kids, your tax return is going to probably take like 15 minutes. So unless you want to pay somebody else to do it for you, you can do that stuff on the IRS website for free. Or you can find one of these TurboTaxes or Jackson Hewitts or whatever, and find whichever one that works best for you and do it for free. But like I said, it all depends on certain requirements.
So now, what are some of the requirements that constitute it being free?
So like you can file your taxes for free. So I went to their site and was like, oh, let me see what they are filing for free, because I know how can I get the free? So on their site, it says that they do something called simple tax returns. So if you have, it's for 1040s only, that doesn't have any schedule. So like if you have like a Schedule 1, a Schedule 2, a Schedule 3, D, C, any of those things, that is not considered a simple return. It's literally for somebody who has one job, no kids, single, nothing to write off. But they do have certain limitations. Like on this one, you have to have W-2 income. If you have limited interest and dividend income that has been reported on a 1099 interest form or a 1099 dividend form, earned income tax credit and sometimes child tax credit. So threshold would be single, one child, maybe 2 kids, but you don't make a whole lot of money type of stuff. So that's where like you got to look into what the requirements are, because you can start putting your stuff in there and it'll start out being free. And then you'll end up having to pay eventually. But like I said, it's your comfort zone. It's whatever you're really into. I do recommend people going to a tax professional so that they can get all of the deductions, because with all of the changes and stuff in the tax laws, if you don't want to read the stuff, because sometimes there's a lot of reading before so you can figure it out, you go to somebody else and they'll take care of it for you. But if you have simple things, like I said, and you're going to do it yourself anyway, go on the IRS website, do it for free. Don't pay for it.
Okay. Yeah, and I think a lot of people, the reason why a lot of people don't file, because number one, they think that it's going to cost them a whole lot of money. I don't have a lot of money to be paying H&R Block and all these other places. And so I'm not going to file.
Well, that's because people don't, I found that people don't look into other tax services. And I understand why, because there have been so many scammers over the last few years of me building this, which kind of makes it tough for me, somebody who's been doing class and I got a certification and now I know how to do taxes. And they out here stealing people checks. Not everybody is doing that, but that's where I feel like a lot of people in these last years, I know that had did tax returns for people, got the checks back, and kept the checks. Like it was on the news and everything. And if y'all know what I'm talking about, you know who I'm talking about. But it makes it difficult. That's why a lot of people are going to I'm going to do it myself and I'm going to do this. And H&R Block, you don't have to go there. I'm out here. You can come to me. And I charge significantly, which is why people know H&R Block. It's a big brand name. They know Jackson Hewitt. It's a big brand name, so they're thinking, oh yeah, they're going to do my stuff for real and they're going to this, that, and the other. It's literally somebody who was trained in a class, or who's somebody like me who opened up an office that know how to do taxes. And so you do your research. You find somebody that you're comfortable with. If you're willing to pay the money that they're charging you for, then that's fine. But If you don't want to pay that extra money, you find somebody that is still doing the job well, because you don't want to sacrifice the quality of the work for a price. But like I said, you can just come on over to my website. I'll talk to you, because I do tax education as well. I don't just be like, well, these are what your numbers say, pay me, because my thing is I want for people to learn how to maximize their money, because I'm teaching people how to build generational wealth. Taxes is a great way to do it. Like you say, you get your tax return down there, you can do all types of stuff. And tomorrow, as a matter of fact, I'm going to be speaking on some of these same things at a home buyers seminar. So
I tell you, as a former property owner, I loved filing my taxes.
when you're a property owner, you get money back from doing that. Because you can write off so much on property. Exactly. Like you can write off the gas, the light, the heat. You can write off tools. You can write off rehabs. You can write off like today. This is funny. For me, this is a business expense.
Exactly.
My gas that I spent, the money that I spent on this coffee, this time frame, this is a business expense. And you can do the same thing when you have property. When you're traveling to your property to fix something, that's when we talk about building other businesses and stuff like that to make tax. But we'll have to have another session for that, have another talk about that.
Exactly, because those of you that are real estate professionals such as myself and others, let me tell you something. I wrote off everything. If I talk to you,
if you talk about business,
it's a business call. Now, since we're talking about properties, if I own an apartment building and I own 8 unit and I sell it, it's my first time ever doing this. What is this stuff they're talking about? Capital gain.
Capital gains, yeah.
Capital gain got me paying.
You have, for this scenario, when you have your investment property and you got a profit, right? That profit.
Because it's income.
Because it's income. Yes, so it's income.
I bought a building in 1980 for, I'll just say $200,000.
Right.
Okay. I sold it in 2020.
Yep.
And with all the improvements and everything, I sold it for $400,000.
Yes, you got $200,000 profit, capital gain that you're gonna be paying taxes on.
And that's why let me tell you, you have a lot of people who believe that taxes is a scam.
It's not.
But unfortunately, it's the way we live.
It's the way we live. So you have to. So you just got to be smart about it. So the thing that I found out about looking up capital gains is that capital gains can be recorded on several different forms. So like in your case, if you are a property owner and you sell your building, you would file that on your Schedule D. It's still a Schedule D because that's the capital gains form. You would file it on your 1040. If you're a business and you partnership or whatever you have, a corporation, 1065 or 1120, you've still got to file that Schedule D. But I also looked up a really quick way on how to avoid paying property tax that I'm gonna tell you real quick.
Oh yeah.
Yeah. I figured.
Come on now.
Well, first I want to tell you there's 2 things. There's one thing that you can do where they explain on why things are like that, so that you got to look out for. So if you sell the building, you're going to pay taxes on your profit, your capital gain expenses in the years that you've owned it. When you sell the building, you got to pay taxes on that depreciation as well, because that's called depreciation recapture. So it can be pretty costly, but the IRS gives you ways on how to avoid doing it. I'm telling y'all, the IRS really don't want, they give you good ways on how to not pay as much tax. You just got to use it. So this one, to avoid paying, I'm gonna just read it straight up. You can avoid paying both capital gains and the depreciation recapture taxes, but you can only do basically a 1031 exchange is when you sell your building and you use all of the money that you got from selling that building to purchase another building. It's basically like a transfer.
Right.
So that's how you defer paying taxes, but you didn't buy another property. But you have to use all of the money from that first property to buy the next one. Remember I said give every dollar a job?
Right.
Yeah. Every single dollar from that sale needs to go to buying the new place. And then you can defer putting off paying those taxes for a while until you sell the new place. So it's like, it just really depends on how you maneuver things. Now, if you're trying to sell it and you get the money, then you're gonna pay those taxes. Or if you're trying to sell it so that you can buy another property, then make sure you're using all of it to buy the next property so that you don't have to pay taxes on it. But if you, let's say you sold it, like you say, for you sold that building for 400,000, and then the next property that you want to buy was only, you only paid like, let's see, you only paid like 350 or something like that, and then you gave them cash, or like the building was only worth 350, the building you was acquiring was only worth $350, or it was worth 450, and you gave them the $400, and then you gave them additional 50 is what it is. The 50 you're gonna have to pay taxes on for the building. So it's like really depends. You talk to your accountant, figure out what works best for you in that situation as well. But there are ways to get around doing these things. You have to just comb through the IRS website, or come see me. I'll comb through the IRS website and figure out what would be best for you to save taxes.
All right. So everybody that's listening, listen, none of us are the average person. We're not a tax professional, so we need to know. We need to engage or have a relationship with the tax professional. Everybody, that we don't have simple tax returns, and many of us, we have sometimes complicated tax returns. We have a lot of schedules, associated with it. And so, if you're new to doing, and then try to go about it on your own, and then maybe even having that tax preparer to look at it just to make sure you did it okay.
Yeah, you can absolutely have a tax preparer go over your stuff, even if you're going to file it yourself. And sometimes they won't even charge you for it. It's just a free consultation that they'll give for you just to review it.
Okay. And so that's what we want to do. And then those of us who are long time tax filers, just remember, you got to keep on filing. Yeah. Keep on filing until the day is done.
Yeah.
And so, but I certainly applaud those that spend the time and went to school to learn all of this. And I certainly applaud you and your business, the Budgeting Queen. And we're going to bring you back. I want to have you back, more in 2020 than we've done in 2019. And so, shout out to you and what you're doing, helping and especially educating our people.
Yes.
African American people on the tax game, our young people. And maybe we'll put together some type of youth literacy program that you can be a part of. But thank God thank everybody that's watching and that's listening. Feel free to stop by Victory Temple every Sunday morning from 8 o'clock a.m. to 9:30 a.m. We're located at 2000 West Roosevelt Road inside of the Community Presbyterian Church building. And you can come and visit us tomorrow. We will be talking about avoiding distractions. So tune in every Saturday at 12 o'clock noon for connections, so that you can be established with those that are in the community, that are making impacts, making waves, and that can educate you so that you won't have to live life like it's platinum. Like it's bronze, but live like it's golden.
Yes. Real quick, can I just do a real quick shout out?
Go ahead.
So tomorrow, guys, I will be speaking at a homeowners seminar that me and one of my colleagues put together. She's working with the Fifth Group Realty, and she's also working with the Realtors Women's Council of Illinois. She's a great realtor out here. Her name is Shanita Tyler. I hope she's listening. Shout out to Shanita. Shamika know her. Hey. But tomorrow we'll be having a seminar. Come on down at 2325 South Michigan. It's Suite 300, Chicago, Illinois. Invitation. It's a free event. You won't have to pay anything. But just come out, get the information. I'll be talking about taxes and budgeting and getting out of debt. She'll be talking about the home buying process and some credit repair stuff. Will be just more education on so that we can get our people. Like, we don't just talk about buying houses. She'll talk about probably if you want to do multi-units and things of that nature, information for people who want to get into that. And then my job will be to help you stay on the right track to get into those homes and those multi-units.
Awesome. And again, thank you for coming out, my Whitney young sister.
Yes,
thank you for coming out and sharing with us. And we'll see everybody next week on IntellectualRadio.com.
Bye, guys.